Demand in the East grew. Metal started getting shipped there. Businessmen opened shop there. Vaults moved there. Exchanges open up and list competing products there. And eventually pricing moves there. And by that, I mean pricing becomes more dominant there. The next stage, and we're not at the final stage yet, but the next stage is we export gold and silver to China. China exports price discovery to us. This is what China is doing. I mean, not so violently. China is saying either your metal will come to us or your price will be received by us.
Recent reports indicate a growing preference among Chinese consumers for gold as an investment choice, especially amidst declining confidence in conventional options like real estate and stocks. This trend aligns with China's central bank's consistent efforts to strengthen its gold reserves while reducing its holdings of U.S. debt. The China Gold Association has reported a notable 6% increase in gold consumption during the first quarter, following a 9% surge in the previous year. Market trader VinceLanci suggests that China's expanding presence in the gold market could have significant effects on pricing mechanisms and supply chain dynamics, potentially enhancing the role of Chinese gold refineries in global trading. Over the past 2 decades, China has emerged as the world's leading gold market, both as the largest consumer and producer globally. However, despite its prominence, the intricacies of China's gold market remain somewhat opaque to many observers. Lanci highlights the recent addition of several Chinese refineries to the LBMA list as a crucial step in solidifying China's position as a critical player in the industry. This expansion underscores China's strategic endeavors to diversify its business operations and assert its influence in the global economy. For instance, Shenzhen Guilin Gold Refinery Corporation Limited's inclusion in the LBMA list reflects its adherence to industry standards and enhances its credibility in the global market. Lanci emphasizes that while recent announcements may focus on silver, the implications also extend to the gold market. The trend of Chinese firms entering the LBMA list signifies a broader shift in the dynamics of the gold market, with China playing an increasingly influential role in shaping its future trajectory. Stay updated with VinceLanci's insights by subscribing to our channel and activating notifications. Thank you for being a part of our community.
The dollar's market share has been quite stable outside of China, or trade that deals with China. And the dollar's market share has decreased on trade inside of China. Not inside, going in and out from China. So it's what we thought is going on, right? Nations that are satellites of China are using the yuan more, and nations on the West are using the euro less. So there's less dollars being used in the BRICS bloc, which we said that would happen, right? They're telling us what we already know. And the market share that the dollar is losing there, it's gaining back with a deterioration of confidence in the euro. So that's basically how it's going right now. And in fact, if you look at the chart there, you can see the China and China-leading countries have increased the use of RMB, that's the yuan renminbi, in cross-border transactions. But, in general, the dollar is stable. So this is one of those Titanic things, it's stable until it's not stable anymore, or you're at the other end of the boat saying, my currency's fine, as you get the whole thing. So that's the first point. The first point is she notes what I personally already know, and that is they're using less. We all already know this. They're using less dollars to transact cross-border deals for commodities. Wheat, oil, China, all those countries over there. Like, we don't need dollars anymore for that, right? So why should we use them? We don't trust SWIFT. That's the first thing. The second thing is there is a doubling. This isn't 2022, 23. There's a doubling of gold and FX reserves in countries that matter. Let me find that. The most notable, I've fragmented her speech to the parts that we care about. It took a little time this morning. The most notable development during the 2022-23 has been an increase of gold purchases by central banks. Something that we all know already. China's share of gold in total FX reserves has increased from less than 2% to 4.3%, over the last 7 years. During the same period, the value of China's holdings of U.S. Treasuries and agency bonds relative to FX reserves has declined from 44% to 30%. Quant people, take a note that from 2% to 4%, or 2% to 4.3%, and from 44% to 30%. So what market share of China's selling of treasuries is gold capturing? This reflects both net purchases and valuation effects, so there's no confusion there. Gold is generally viewed as a politically neutral, safe currency asset, which can be stored at home and insulated from sanctions or seizure. It can also be an inflation hedge, but cannot be easily used in transactions. Well, that's debatable. What's interesting to me, it's probably coincident, but it's not. China's gold reserves during this time have doubled by 100%. And also during that time, use of the yuan has doubled by 100%. The yuan has gone from 4% to 8% of the market share. And people say, well, that's not a lot. Yeah, well, it is a lot, because the euro is at about 8% market share, and it's been that way for 15 years. Okay, so the yuan the renminbi is doing that in a much shorter time frame. So this is the exporting of Chinese economic power.
As concerns loom over a potential market crash that could send shockwaves through U.S. markets, BRICS countries are increasingly recognizing the risks associated with hoarding the dollar in reserves, understanding that such a strategy could severely impact their own economies. Consequently, developing nations are actively seeking ways to diminish their reliance on the U.S. dollar for trade transactions, aiming to mitigate this vulnerability. Vince highlights that while the dollar's market share remains relatively stable outside of China, its dominance in trade deals within China has notably diminished. This shift underscores broader changes in global trade dynamics, casting doubts on the U.S. dollar's status as the primary reserve currency. Renowned financial author Robert Kiyosaki has also sounded the alarm, predicting a further deterioration in the condition of the U.S. dollar. He attributes this decline to escalating debt levels and the extensive printing of trillions of dollars, indicating mounting concerns about the dollar's long-term stability. In response to these challenges, central banks, including China's, have been significantly increasing their gold purchases, leading to a substantial rise in gold reserves. China's decision to double its share of gold in its total foreign exchange reserves over the past 7 years reflects a broader trend towards viewing gold as a politically neutral and safe asset amidst economic uncertainties. Let's get back to the interview.
Shenzhen Huilu Gold Refinery Company Limited added to the LBMA silver good delivery list. The silver refinery of Shenzhen has been added to LBMA's good delivery list for silver with effect from Wednesday, the 8th of May, 2024. The company has satisfied LBMA regarding its ownership, history, production capability, and financial standing. Here's all the information. So what are we talking about here? We're talking about another, it's not the first, another Chinese firm being admitted to the LBMA. So the LBMA needs metal. China needs to expand its business. What are the implications of this? Is it bullish for silver? Yes. Bullish for gold? You'll find out that it has been bullish for gold. Since 2019, there have been 12 refiners added to the LBMA list. I went through them today. Of the 12 that were added, 9 are from China, 1 is from Kazakhstan, and 1 is from Australia. There are no refiners opening shop in the West. There are only refiners and vaults opening shop in the East. Now, one of the things that we've talked about here before is the flow of business. When demand in the East grew, metal started getting shipped there. Businessmen opened shop there. Vaults moved there. Exchanges open up and list competing products there. And eventually pricing moves there. And by that, I mean pricing becomes more dominant there. The next stage, and we're not at the final stage yet, but the next stage is we export gold and silver to China. China exports price discovery to us. So when you open up refineries in Europe, you are able to lower your cost, reduce transmission time, meaning from getting the metal from point A to point B, and also from getting price from point B to point A. So they're reglobalizing the supply chains along Eastern lines. Another silver brick in the Chinese wall is the way I look at it. Either the expression, the scene where Luca Brasi says or the Godfather says either your brains or your signature will be on that contract. Well, this is what China is doing. I mean, not so violently. China is saying either your metal will come to us or your price will be received by us. Either you take our price and start broadcasting it, or we will take your metal. China has metal and they will sell it at a price, but they won't sell it to you in the West unless you acknowledge their price. And that's where we're headed with this. Once the price on the outside reflects the price on the inside, you're going to start seeing China perhaps do two-way business. But between now and then, you should start to see the Chinese arbitrage between silver start to narrow a little bit. If it doesn't, then we're going a lot higher. If it does, we're still going higher, just at the higher end of the arbitrage.
As we ponder the shifting landscape of the gold market, especially with China's growing influence and strategic maneuvers, how might these developments alter the future course of gold prices and global trade dynamics? We invite you to share your insights in the comments if this video strikes a chord with you. Join our community by subscribing to our channel and turning on notifications with the bell icon. Thank you for being a valued part of our community.